Khairul, number matrix 05546. Based on the research that I made from the Bank Islam, I found that they have the credit issue, that is, they let the card holders to spend more than the spending. This is because the management didn't make a limited for them to make a payment for something. Second is the credit card issues. About the credit card issues, it not only happen at the Bank Islam, but it also happen at the all bank either in the Malaysia or abroad. Sometimes the credit card fees charged by the bank is very high from the spending limit card holders use. And the last is spot or the identify theft. Identify theft is when someone use your personal information without our self-authority to commit the fraud. This is because now there are a lot of scammer that in disguise being a staff of the bank. Credit risk is a measure of the credit worth of a borrower. Risk management is a term that applies to a systematic method of establishing the context. Meanwhile, the risk management process is a framework for the action that need taken from the risk management. There have 5 steps of the risk management process. First is to identify the risk. Identify the risk is for expose the operating environment. The advantage is it can be visible to every stakeholders in organization with the system. Second is analyze the risk. Analyze the risk is important because for the understand the link between the risk and factors within the organization. Third is evaluate or rank the risk. It allows all the organization to gain a view of the risk exposure of the whole organization. And then is to treat the risk. For treat the risk, it can be done by connecting with the experts of field to which the risk belongs. And lastly is monitor the risk. This is because not all the risks can be eliminated and have some risks always been present in the business or the company. The clear communication between the team and the stakeholders is important when it comes to ongoing monitor the potential threats.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nozawanis binti Muhammad Zulkifli and I would like to present you a topic of risk transfer in credit risk management. Risk transfer is a potential of an adverse outcome faced by an entity or individual will be shifted to the third party. There are several mechanisms of risk transfer in credit risk management. The first one is credit derivative, which can be done by packaging, security, and marketing credit risk exposure. Secondly, swaps. This will work by exchanging sets of cash flow over a period among the debtor and creditor. Swaps that included in risk transfer is debt asset swaps, swaps of liability, and deposit swaps. Thirdly, forward future used as a mechanism of risk transfer in credit risk management. Forward or future is payment or receipt of an asset is postponed to transfer the risk. Forward or future in risk transfer included salam and commodity futures, also currency forward or future. Lastly, risk transfer mechanism is option. One of the option of mechanism is Ba'i al-Tawrid with Qiyar al-Shad. Thank you.
Risk mitigation is a tactic to plan for a lesson the impact of risk posed by a company. Comparable to risk avoidance, risk mitigation takes measures to mitigate the detrimental impact of threats and events on business stability. There are two techniques of risk mitigations. The first technique is include traditional techniques such as risk reporting, internal and external audit, GAP review, RAROC, internal ranking, and so on, all of which are in accordance with Islamic finance standard. And the second form consists of procedure that must be learned or modified while keeping Sharia conformity in mind. As a result, discussing risk assessment technique for Islamic banking is a difficult task.
Assalamualaikum, my name is Shamila Nadira binti Sauf Effendi, metric number 055327. Risk avoidance entails refraining from engaging in any behavior that could be hazardous. A risk avoidance technique aims to reduce the number of vulnerabilities that can be exploited. Regulation and procedure, training and education, and technology implementations can all help to prevent and mitigate risk. Consider an investor who wants to buy shares in an oil firm, but oil prices have been dropping steadily in recent months. The development of oil is fraught with political risk, as is the oil company's creditworthiness. He evaluates the risks associated with the oil industry and decides against investing in it. This is referred to as risk avoidance. In CIMB, the use of various credit risk mitigation strategies such as adequate credit structuring, collateral posting, and third-party support are all part of the credit risk management process. Wherever practicable, credit risk mitigants are used and are considered a secondary solution to the obligor for the credit risk underwritten. Bank Islam Malaysia Berhad, BIMB, as the only full-fledged Islamic banks that were listed in the Bursa Malaysia Berhad, have to deal with a new and unique risk as a result of their unique asset and liability structure. Another aspect that makes Islamic financial institutions riskier than their counterparts is the lack of standardization in each form of contract. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Sufyan Hakim bin Ahmad Apandi, and my metric number is 056374. Okay, and I want to present about the risk absorption. Risk absorption is occur because some risk cannot be eliminated or transferred by the bank. This is because the difficulty of the risk and hard in separate the risk from the asset. These were accepted by the Islamic bank because the institution particular in dealing with the risk and rewarded accordingly. There is a few types of risk absorption. Firstly is the collateral. Islamic bank use collateral to secure finance because collateral or is allowed in the Sharia. According to the principle of Islamic finance, a debt due from a third party and something which is not protected by the Islamic law as an asset, such as an interest-based financial instrument, is not eligible for use as collateral. The next one is the guarantees. The guarantees supplement collateral in improving the quality of the credit. After that is the loan loss reserve. Sufficient loan loss reserve offer protections against expected credit loss. The effectiveness of this reserve depends on the credibility of the system in place for calculating the expected loss. And lastly is the allocating capital. The basic concept of the risk adjusted return on capital is used to provide a decision rule that allocate capital to a project or investment according to the risk.
Yeah, Assalamualaikum warahmatullahi wabarakatuh. My name is Saimi bin Omar Jamil, 056154. I will continue my present about risk measure. According to the Basel, the bank need to compute credit risk based on the three measures. First, probability of default, PD. It is describing the likelihood of default over a particular time horizon. This gives the budget the possibility of the borrower not being able to meet his debt obligation. Second is loss given at default, LGD, the amount of fund that is lost by a bank or other financial institution when a borrower default on a loan. Third is exposure of default, EAD, along with LGD and PD is used to calculate the credit risk capital financial institution. So, in order to measure absolute credit risk, the measurement process requires transformation at three levels. First, recognize other driver of credit risk and probably discover a few more if requirements separately. Second, refine the recognition and measurement technique of each of this driver. Recognize the impact of risk mitigation technique and refine measurement technique for the risk mitigation impact. Third is recognize correlation among each of the driver in the portfolio. So that's all from me. I will conclude to next presenter. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nadia binti Syari with matric number 055015. I'm here to present about the financial risk based on these two banks. First is Bank Islam. Bank Islam will manage the capital provided by investor for the activity investment that are deemed appropriate without the involvement of investor. Subtract points from two changes in product characteristic. Investors are advised to understand the risk profile before deciding to settle on any investment contract. For wakalah and mudarabah contract product, Bank Islam uses a secured financing portfolio sort of a portfolio housing financing to reduce the level of risk. Under this investment account product, the return is commensurate with assets risk profile. In this case, investor will enjoy the rates of returns from the portfolio housing financing based on an agreed mutual profit rates. For the CIMB Bank, the challenging operating environment required them to look all the areas of the business and reevaluate strategy, which led to the introductions of the Forward 23 plus long-term strategy in the early fourth quarter of 2020. As part of a plan to balance the challenging environment and strengthen the balance sheet, their immediate priority is cost management. The CEO of CIMB Group project better financial performance for financial year 2021. With lower allocations expectation, they expect that the economic recovery will continue to be uneven with downside risk in the short terms before increasing the second half of this year. That's all from me. Thank you.